Today was a wild day after the FOMC statement, followed by Jay Powell's press conference. As we come over and look at the SPY, we barely missed, making a new all-time high today, but now we have a hanging man-ish type of candle. Thankfully, we're able to close one of the gaps. However, Powell just confirmed. Now, we come over and look at how the indices fared across the board. The Dow was up 260 points. NASDAQ was down 72 points. S&P 500 down 6.41, with the Russell 2000 being up 0.64. Now, when we look at advancing issues versus declining, we had 51.7% of issues declining on the day. And then when we come over and look at the sectors across the board, two sectors were out far pacing everything else: consumer defensives and financials. The big laggard out there today was technology, which is really no surprise given the way the NASDAQ traded. Now, if we come over and look at the heat map real quick and look at how the stocks fared out there, specifically the Mag 7 stocks, the NVIDIA down 2.67%. And as we go across and we look at the Mag 7 stocks, we had Tesla in the green, up 0.96%. Microsoft barely up 0.19%, and Apple up 0.35. Every other Mag 7 stock today was actually in the red. And we're talking about this on the live stream. Somebody brought this up. Take a look at Oracle. Now, Oracle has this potential for this A to B equals C to D pattern on the way down, which would then complete somewhere around 264.93. But I want to caution you guys real quick. Before this pattern can be validated, we must break below the swing low of 291.34. Now, as we come over and look at the Fear and Greed Index, notice they got even greedier out there today. Fear and Greed Index with a reading of 58. So now we got to ask ourselves this question: why are some of the Mag 7 stocks in the red? Google, Meta, Amazon are facing an expensive AI risk that nobody is paying attention to. And what it basically goes on to say is they're spending a lot of money on networking, and things that have depreciating costs are threatening their margins. And we already know everything has been blown out of proportion. For instance, if we look at NVIDIA real quick, yes, NVIDIA was down today, but I want to bring this to your attention. If we look at the monthly chart, look, we scroll this out, look at the MACD divergence, right? The MACD indicator is roughly at the same point, but we can see that NVIDIA on the monthly chart, the high is substantially higher than the other peak in the MACD indicator. And again, we've seen a lot of this during the dot-com bubble burst. So we got to be very cautious as we proceed forward. Now we look at what Jay Powell confirmed today. Fed cuts interest rates by 25 basis points as it pencils in 2 more reductions this year. Now we got to be careful, because anytime the Fed goes on an aggressive rate cutting campaign, this is not bullish for the market. This is letting us know there's something underlying that is about to break or is already broken. And Powell is very adamant that he is concerned about the labor market. If you guys joined me on the live stream today, not only did you have a chance to win multiple prop accounts, but you also heard Powell talking about this very same thing, as we did stream Powell all day long. If you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. So with the NASDAQ being weak out there today, let's come over and look at the daily chart. Well, we have a hanging man-ish type of candle. We look down at the MACD indicator. Is it making new highs? Absolutely not. As price continues to push on up higher, the MACD indicator simply does not. And let's not forget, on Friday, we have triple witching. Quite often the day before, which would be Thursday, tomorrow, quite often we'll see a little bit of weakness out here in the market right in front of triple witching. On the 4-hour chart, it's looking even more and more clear that we are likely going to get that bearish cross of the MACD lines in the very near future. Now, on the 30-minute chart, look at the wicks that we had out there today. That was absolutely massive. MACD indicator does look like it wants to cross on the way back up, but we'll see. It's just going to simply just kiss and turn right back down. Notice we closed right near the point of control, and I do think we have a shot of the market coming back down and testing these wicks. If it was a single wick, I think a little bit less likely we come down there. But now that we have 2 back-to-back wicks, watch out, we can see prices coming back lower. Now, if we come over and look at the futures markets real quick, look on the 4-hour chart. This is a zone that we drew out today on the live stream this morning. And basically, if we look at the minus development area from the prior week's volume profile level, we talk about this all the time on the live stream. The first time we come into it, we expect the market to bounce out. Even the second time, quite often, will bounce out. And then look what we did, right back through it, boom, back up. But the third or fourth time, watch out, we're likely going to go substantially lower. And let's not forget, we still have value area high from the prior week at 24,182. And the rule behind that is whenever we close outside of value, last week closing above value area high, that indicates that the next 1 to 2 sessions, we are likely going to come back and visit value, in this case, value area high. Now, a session in this case, since we're dealing with a weekly volume profile, would be 1 week in time. So either this week or next week, highly probable we are coming down to 24,182. Now, when we come over and look at the 30-minute profile, I am a little bit disappointed when I look at this chart. We have the P point right here. That has roughly a 70% chance of being tested at least one time per day, and we did not make it up there today. And if we scroll this back a little bit, look at yesterday. Yesterday, we also failed to hit the P point. So this is going to be critical, right? We don't know exactly where the market's going to close. Now, the way to determine where the P point is, one, you can wait till 6 o'clock and let the indicator plot it for you, or you can simply take the low price plus the highest price and then the closing price, add them all up and divide it by 3. So now if we had the closing price where we are right now, went ahead and added it all up, we'd have the current P point that's going to come out tonight at 24,429. So if we look, that's currently lower than where we're at. So by default, I am going to be heavily focused on that price point. Now, I want to remind everybody right now, Take Profit Trader having a 40% sale off all their valuation accounts and 0 activation fee. Take advantage of this offer. Use the link in the description box down below. Use promo code epitome at checkout. Now, today on the live stream, when the FOMC came out, we were watching this liquidity level all the way down here at 24,300. Notice right where the market came down to, right down towards that price point before we actually bounced up. And if you look, we had 124 contracts sitting there well before the FOMC statement actually came out. So if you guys aren't using order flow, you might want to think about adding it to your arsenal. And if you guys want to check out Bookmap, there's a link in the description box down below. So now when we look at the volume profile levels real quick, notice we're closing within value, but value high will come in at a price point of about 24,513. The point of control is going to be down here at 24,410 and a half. And value area low will be just below that, 24,393. Now, in the event tonight, we do pop up, we get above value area high, then we start coming down. I don't want to use the point of control as target number 1. Instead, I want to use this high volume node right here, somewhere in the ballpark of 24,476. Then below that, we can look at the next high volume node at about 24,438. Then the P point, then the point of control, and then value area low, anything below that. Can we come all the way back down there, run the lows, and then come potentially all the way down towards value area high from the prior week? Also on the weekly profiles, notice we have 2 consecutive untested point of controls. So I will not be the slightest bit surprised if we make it down towards those areas. Now, when we come over and look at the SPY real quick, also a hanging man type of candle, and notice we had that large wick. Now, the MACD indicator is a bullish cross. However, look at this whole minus development area in the profile. We basically came down to it, boom, rejected out. So I do think we're going to spend a little bit more time working down towards this area, trying to fill in this minus development area. Now, keep in mind, even if we go down there, that does nothing in terms of destroying the uptrend in the current market. Now, we do have another gap a little bit lower at the bottom of the minus development area at about 650.29. On the 4-hour chart, look, the MACD indicator just about to cross to the downside. And can we get that cross? And if so, will it be a multiple day, maybe even a multiple week correction that we see in this market? On the 30-minute chart, look at the profile. All the volume was built out way up here. We spiked down, they ran it back up. Now, unlike the NASDAQ, we don't have 2 big wicks on the way to the downside. So we have to wait and see. The MACD indicator is right around the 0 line. Looks like it may want to go ahead and curl and cross to the upside. Now, the way I'd want to play this is if we break value area low, look down here for these candle bodies to be retested, 657.71, and then potentially a little bit lower. A little bit lower in this case for me would be down here towards looking for that gap to be filled at about 650.40 and kind of filling in this whole minus development area and maybe even coming down here and testing out the anchored VWAP at about 648.15. Now, as the market was coming down today, notice when we were spiking down right here, if you take a look at the VIX roughly at the same point in time, it looked drastically different. You can see the VIX after the FOMC, the VIX spiked up, the VIX went down, spiked up a little bit, came back down, spiked a little bit, but ultimately the VIX was more so pointing to the downside. And that's something we talked about in the live stream. I said, something's not right. We had some lower levels we were watching out on Bookmap, but I said, watch out because the VIX is not confirming those lower prices. Look at the dollar index after the news. Dollar index initially spiked down and then rocketed on the way up. Dollar index on the daily chart is very important. If we go ahead and we draw a horizontal line across the prior low, notice what we did today. We wicked it, and now we see the dollar index coming back up. So was the rate cut potentially already priced into this market? Well, if we come over and look at the precious metal gold real quick, gold suffered a nasty down day today, Gold down 32 points. With this, if you look at the MACD indicator, it does look like it wants to roll over just a bit. And I still like this highlighted zone that we have mapped out. 35.77 down here to about 35.35. Now, in the event we do break higher, you can see we barely missed hitting our target up here at 37.47. Today we had a high of 37.44. So we missed the ultimate target that I had by about 3 points. And we'll see, is that good enough for government work before we start to get that correction underway? Now we come over and look at the S&P futures real quick. Notice we had that value area high marked off and we were not that far away from it at the low. Low today was 66.11. Value area high from the prior week, 66.05. So are we going to work our way back down there, or is it going to be the case where we just see new all-time highs in the market? Let me know your thoughts in the comment section down below. Now, as we come over and look at the daily profiles real quick, unlike the NASDAQ, the S&P 500 was able to take out the P point. Now we're closing right near the point of control, but in the event we start breaking value area low, I want to target these candle bodies, 66.46.5. Anything below that, I then want to refer either back down towards this wick here a little bit, or really over here towards the weekly volume profile charts. And more specifically, try to target value area high. We breach below value area high, then I want to target this minus development area from 65.85 down here to about 65.74. Below that would be the point of control. Then really down here towards a high volume node at 65.27.5. Now, unlike the NASDAQ on the weekly chart, we do not have two consecutive untested point of controls. We are only dealing with 1 week where the market has not come back to test the point of control. Now, if you trade with prop firms out there and you want to learn how to copy trade on TradingView, then you want to make sure to check out this next video right here.